And it's just very interesting to see Tron taking a shot at Solana. It's interesting because you've seen just Sol just kind of like insurgent versus incumbent for so long, and now the shoe's on the other foot, which is a different kind of perspective for the market to take.
Hey everyone, this episode is brought to you by Namada, the shielded asset hub rewarding you to protect the multi-chain. So not only can you protect your own data across any asset and any chain, but you also get shielding rewards for strengthening data privacy protections for everyone. So you can check them out at namada.net and follow their mainnet launch. Stick around, you're going to be hearing all about them later in the program.
All right, everyone, welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer, the views expressed by my co-host today are their personal views and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone, welcome back to another roundup of Bell Curve. You got Michael's 1 and 2 and Vance. Fellas, good to see you.
Been a minute.
Been a minute.
Good to be back.
Yeah. Michael, how is Laguna Beach?
Just in and out for the day.
You know what's better than, you know what Laguna Beach is better than? Grand Rapids, Michigan.
Grand Rapids, Michigan.
Grand Rapids, Michigan, dude. I got stranded there. I was visiting some of my girlfriend's friends over the weekend. We were supposed to fly back on Sunday, and American just canceled. Shored me up there for 2 days, paid for nothing. I did like the most Karen tweet of all time and just tweeted at their
Saw that tweet.
public thing. And you know what? The funny thing is, they actually followed me, and I went and I slid into their DMs. The last time I talked to them was 2017, and I actually got a Twitter account to tweet at them because the last time I flew American, they dumped me in Dallas for 2 days. Also, it was a connecting flight from Miami, where I was for Fire Festival, which was probably the worst travel experience of my entire life. Yeah. So
we never talked about the fact that you were going to Fire Festival.
Yeah, dude, I was going to Fire Festival. Me and Yano and like 12 other friends. We were going the second weekend, and we saw those like ham and cheese sandwiches, and we were like, thank God we didn't go to this the first weekend. So anyway.
Whew.
Yeah.
Well, round 2 of Fire Fest in Grand Rapids.
Yeah, exactly. All right, so I feel like maybe we could actually just kick it off by we were talking about just the general sentiment and everything on CT, and I don't know. I know maybe Vance, I can kick it over to you here because I do feel like just zooming out, prices are pretty good at the moment, and I've been seeing some tweets like, "Hey, Bitcoin is over 60K." What's with all the, we're not dying here, right? We've basically been ranging this entire year, but it feels like everything's very PvP and just sentiment's not that great. And I don't know, just what's your sort of thought process about where we're at, the zeitgeist is at the moment?
I mean, we're very, very busy. I think first thing is like there's a lot going on kind of in the background. And I think a lot of funds are kind of in the same mindset of like preparing for what's to come and, thinking about the 2024 to 2028 timeframe. Like we're not playing for the next 74 days. And I think, outside of that, Michael and I are enjoying our summer. It's like the prices are pretty good. ETH's at, 2,700, Bitcoin's above 60. The ETH and BTC inflows have been pretty healthy. And I think, like everything is ranging. Even NVIDIA has been in a $20 range since March. So like if you show me someone who's absolutely having a great time in capital markets today, I'd be pretty surprised. Like there's maybe a couple of trades across like traditional finance, crypto finance, traditional venture, crypto venture that are really working, but I think people are just kind of setting up for what's next. And frankly, like I don't blame the markets for kind of being like in a mindset of let's see what happens to the election, because on one side you got Donald Trump saying tax cuts, I'm going to be the Fed chairman, I'm going to do all this deregulatory stuff. And on the other side you've got Kamala Harris saying like unrealized gains will be taxed. All these different policies. And so markets want certainty. And And I think you will be paid to take the uncertainty risk that exists today. But as things move closer and closer to the election, I think markets are going to kind of turn back on. And, Polymarket flipped back to Trump over the past 24 hours, kind of boosted by the RFK rumored dropout. And it seems like that is going to be the main thing that starts to move markets. If they can get beyond kind of the margin of error in polling, they're going to kind of either go, really, really, in our view, high if it's Trump, and if it's Kamala, it's probably like, more flattish in terms of the market's perception of where things are going to go. So I think it's just like we're working with founders, building real products, very bullish on crypto in the future. And then just seeing kind of the alignment anons and like bearish people on CT tear each other apart is just like mute those people.
Only I agree with all that. The only thing I'd add is there's also just like, this isn't just crypto's problem. This is sort of like everybody's same thing. August is the time when basically Europe is on vacation, every single person, and half of the people in the US are. And you've got, the largest revision of payroll that we've seen since 2009. And these happen every year, and typically they're low, but they're not 818,000 low. But you also have, the jump in unemployment. And so I think the macro kind of side of it as well is people are like, are we in a recession or are we not in a recession? We know rate cuts are coming, but are rate cuts going to be 25 bips because it's we're cutting rates because we don't need to have them at 5.25 anymore? Or is it we're cutting them 75 bits because like we're about to go through a bad recession? I don't think that it's the latter, but I think that people are still waiting to see that answered as well, in the same thing that, we're waiting to see what the election results will be. And I think we're going to find that it's going to be like we just saw payroll come in at exactly 232, which is exactly what it was expected to be. And so I don't think things are falling off a cliff as people were maybe cautiously preparing for as they went on their summer riverboat vacation. But I do think that, we're going to come back in a couple of weeks here in September post Labor Day, and it's going to be like, all right, we're back to business. What are we doing? And people are going to be like, all right, we're waking up again. Just anecdotally, from the people that we talk with who aren't founders, who aren't the ones that are building day in and day out and probably not taking months-long vacations, when we're starting to see them come back as well. And I think a lot of people took some vacay and took some time, and these next couple of weeks are going to be when everybody starts responding to those emails that have been sitting in their inboxes for the last 4 months or 4 weeks.
And the other thing I'd say, just to cap off Michael's perspective, is like that Nikkei crash basically forced people to unwind things. And like even our friends who work at these pod shops are like, yeah, we just cut everything. And, their bonus periods get calculated in, I think, 2 months. So everyone's just like, why am I going to take risk going into an election year if I've had a pretty good year, which the S&P has had, a very good year? I'm just going to kind of sit here and wait. And like people are still, the yen carry trade is kind of back on, maybe not, but like people have not put positions on. And, the amount of out of office emails we're getting when we hit people up is substantial.
So I wanted to respond to, because I wanted to get your guys' take on some of the policy positions that it seemed like have come out of the DNC from Kamala Harris's camp, and like just the odds on Polymarket in general. But there is a seasonality component here. This was I'm not sure if you guys can see my screen. I'll zoom in a little bit, but this is from a Twitter account called 2x Dog, which I have to imagine is a Russ Hanneman reference. But what we're looking at here is the returns.
So funny. I just put that together.
Yeah, which is maybe we can link that at the end. Like this is the Russ Hanneman, the 100x pure play becomes a 2x dog type of thing. But anyway, this is what he's put together a pretty interesting chart. This is the monthly returns of Bitcoin going all the way back to 2014, and what you can see, the title of this tweet is "Hunt for Green October." October is historically, the best returning month for Bitcoin in general, with the average over 10 years being 20%. And then for November, it's 5.6%. And for December, it's just under 10%. And so there is a big, outside of just what's going on in trad markets, or maybe because of it, it's historically been a pretty good period for Bitcoin. And in crypto. And if you put that together with the election and cutting rates, I feel like there's a lot of reason to be really positive going into the last half of the year, or the last quarter, I guess. But
yeah, I mean,
the other
Q4,
data that I've
Q4
heard.
seasonality is a real thing.
Well, exactly. So Q4 seasonality, the S&P 500. Oh, I'm going to mess this data up. The S&P 500 has peaked in Q4. It's something like 75% of the times going over the last 16 years, and it's 55% of the time in December.
Yep, like
so if you think about it, it's like 55%.
Santa Claus
and
Valley.
You've got 12 options, and you've got 12 options. That's absurd.
Yeah.
The things I remember from like the years of crypto that I've been in is like the summers are usually like pretty slow / bearish, and then like the Q4 kind of time period is usually the most bullish. And like I remember one summer I rented a house in Malibu, and like I was like had a big Q1, and it was like this summer's gonna be awesome, and I'm like sitting in this house in Malibu, and like crypto's like crashing sideways. I'm like fuck, and then I remember, and like a lot of the times it's like I'm at my parents' house in Canada, like in a very small bedroom, and like crypto's ripping, and there's like old like hockey jerseys of mine, like and Michael has the same thing in Palo Alto, but it's like it's weird. It's whenever you're kind of back home and like not in the most gregarious setting, it's usually the most bullish, which is a bit weird.
Why can't we have green God candles when we're in Malibu?
I know that's what I want. It didn't ruin the experience for me, but it's usually
that was a good summer.
That was a fun summer, but you just gotta wait for this stuff. Like nothing is gonna happen overnight, and you're not playing. Like, look, if you're playing for the next 75 days of crypto, I don't know what to tell you. Probably just like either develop a perspective on the election and bet that way, or just sit on your hands. And we're sitting on our hands in some ways. We're still leading deals. A lot of stuff is happening in the background for funds. People are kind of getting ready for what's next.
What else is sort of nice about the Q4 seasonality is Thanksgiving conversations are very different, whether crypto is going up or going down. And if you've ever suffered through like a Thanksgiving when crypto's just tanking, it is like it is
those are rare though. Those are rarer. I mean, like.
Let's be serious. We had truly the Pico top of Bitcoin and ETH in 2021, and then we literally had SBF in 2022. Just that back to back was brutal.
I know.
Tough, that wasn't great. Not much you can really say, but I do think that crypto has. Even just anecdotally, I was going this weekend to visit some of my girlfriend's friends. So I was in Michigan, and I was asking, like, they have like 3 kids, young kids. They're not like taking huge risks on investments or anything like that. But he was like, yeah, I've got some crypto. I was like, just out of curiosity, like, what do you have? He was like, I got Bitcoin, and then I got Cardano. I was like, that is a barbell. He's like, what do you think about Cardano? I was like, it's
not a lot.
not at all. Don't think about it at all.
It's a choice.
I mean, the other thing I've been looking at is it looks so Nvidia earnings are so it's like we have like a big actually like kind of week or so of data. We've got Jackson Hole, and Jackson Hole is usually when there's a policy pivot, like that one year where he said like we're gonna start hiking rates by 75 basis points until you start crying. That was J Hole.
No. He had already started the 75 basis points.
Right. J Hole was the 30-second speech where he was like, fuck them kids. Just like,
the market needs to feel more pain.
Right. And so you had the Fed transcript get released, I think yesterday. And it was the vast majority of participants, this is like the key language, the vast majority of participants agreed that easing in September would make sense. Half and half or so, agreed that maybe even July would be go time. And so we have that. We have obviously the debates coming up. It's just such a newsy couple of weeks, and usually debates don't matter. But like the last time we had a debate, one of the candidates got absolutely shelled and had to step back. So, I mean, we'll see. I don't think the market is in a mode where it's going to take a lot of risk at the moment. But and then we have Nvidia earnings next week on the 27th. And if you remember from last year, the May earnings for Nvidia is what sent the market into a frenzy upwards.
Yeah.
And then the Q4 one was kind of like, okay, yep, this is all kind of like par for the course, priced in, didn't really do much for 6 months. When Nvidia starts to top out, that's going to be a huge indicator for risk markets that like it's time to move out further on the risk curve. There's probably not a double left in Nvidia. We're not adding another 3 trillion of market cap. And so people are going to look for 2Xs in other places. And I think, one of those places is going to be crypto.
Hey everyone, this episode is brought to you by Namada, the shielded asset hub protecting the future of the multi-chain. Namada is a chain that's near and dear to my heart because in previous seasons of Bell Curve, we've talked about how the cardinal original sin of most blockchains is not thinking about privacy from the beginning, but also because if we want to onboard a whole bunch of applications, it doesn't work in a default transparency setting. So Namada not only brings about a better future that we all want, but it's going to help onboard a ton of new applications. So Namada introduces a novel shielding reward system. The way that it works is if you hold your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect non-rewards in return. Namada will initially support IBC and Ethereum-based assets, but eventually the idea is for this to expand into a comprehensive hub for all assets. Really, really excited about what the folks over at Namada are doing. I highly recommend that you go and check them out at namada.net. You can follow their mainnet launch, which is soon TM. Very exciting. Tell them that I sent you. Click the link, bottom of the show notes. So I want to get your guys' perspective on, I'm looking at the poly market odds right now, and I think Trump is leading by about 7 percentage points. So that's been a flip. It looked like Kamala was leading there for a little bit. And, outside of us trying to like read the tea leaves and be like, who do you think is going to win this election? I guess I would love to get your guys' perspective on how different you think the reality would be from a market's perspective under a Kamala or a Harris versus Trump administration. And, I guess the one thing that I can see, I mean, frankly, a lot of the policies that, it seems like Harris is suggesting are just not roads that we want to go down probably as a country, like taxing unrealized gains. I know the idea is like, that's never going to happen or that would never pass, but these are still being suggested, right? And the fact that they're even being suggested tells me that
it could definitely pass.
Yeah.
If there's a red Senate, it could or a blue Senate, it could definitely pass.
And the 45% cap gains tax, that feels like it absolutely could pass to me.
I mean, like the super nerd election insight is like there's been for things to pass, there needs to pass obviously the House and then needs to pass the Senate. Yeah. And there are rules which say that in certain circumstances, mostly budgetary circumstances, you only need a simple majority of the Senate to pass things. But just wait. And so if it's a 50-50 Senate and, basically it comes down to this one Senate seat in Montana, if the Democrats win that Senate seat, it will be 50-50. They probably will be able to pass things along party lines. TBD how many Democrats are going to be going along for no capital gains. But the polls that have come out of Montana over the past 2 weeks, one of them the most recent showed Sheehy, who's the Republican contender, up 7. And another one showed on the presidential side, Trump up 23. And so if Trump is up 23, it's going to be very hard for the Democrats to win that state. And so I am personally pricing in a Senate majority for the Republicans, which would mean that this unrealized capital gain stuff, the most fringe and extreme stuff, will not pass. And so I think over the past, honestly, 2 weeks, it's become more of if Kamala wins, it's probably something looking like a lame duck administration, just because there's not much you can do if the Senate is Republican controlled. So we'll see. I obviously think Trump is going to be way more positive for capital markets, but Kamala's policies have kind of been defanged from just an electoral standpoint in the Senate.
And just that's on the, let's put it this way. That's on the policy pieces that she has talked about or has put out, which is the unrealized capital gains, the no more capital gains treatment, or the unrealized tax. But what she hasn't talked about is anything crypto related. And all that we've gotten so far from one of her advisors was yes, we are open to the idea. Didn't even mention crypto or blockchain, just open to the idea of positive policies for innovation economies. That could mean AI, that could mean robots, that could mean crypto, that could mean nuclear, that could be anything. But I think what they're trying to do is basically not say no to anything at this point for fear of cutting off any sort of potential votes. Because what you really have right now is a number of Democrats or people who are democratically leaning in their political views who are also big or, involved in the crypto industry. And they're just looking for any sort of oxygen from the Democratic side. They're just looking for an inch because they need something to be able to justify voting for her if voting for the other person is going to be, voting for their industry versus voting for their political persuasion. And that's basically what has been provided, which is, you got a breath of air, but that's it. And what you have on the opposite side is a plan, policies, and a track record of people who want to make change. There is a specific, there are specific items that Trump said at his speech in Nashville. The rumor is, it hasn't happened yet. We're recording this Thursday morning. The rumor is that RFK is going to drop out tomorrow and he's going to join up or be endorsed or endorse Trump, probably with some position like a head of, I don't know, NIH or CDC or EPA CIA. Or I think the CIA thing was a joke, but pretty funny nonetheless. Or potentially the one is Attorney General because he is a lawyer. Any of these things would be, I think, very positive because it bolsters the perspective of who is making decisions and who is promoting new laws and regulations, leading these institutions, and how do they view our industry. RFK, I would say, was even more positive than Trump was in terms of what he said in Nashville. And so if you combine forces and you already have Elon who said, I am ready to serve, and Trump saying we want him in the cabinet, you're probably going to have Vivek in some sort of role, and you've got JD Vance. All of these positive perspectives mean that the White House, if it was to be Trump, would be fundamentally pro-crypto. And we know that to be a fact because they have plans in place and bullet points that they speak to, not waxing poetic around, hey, we're going to innovate, we're going to promote innovation. Like that's what we're going to do. So that's just on the policy perspective. But going back to the Senate, on the same points, what the Senate also controls is the governing bodies and basically who is promoted into roles like the SEC and CFTC. What really does matter is that both of those entities have a 5-commission body, that 5 people as commissioners. Whoever is in the presidency gets to have the sway. So right now there's 3 Democrats and there's 2 Republicans at the SEC. And Gary Gensler's term is up in, I think, January or February 2026. So there's at least another year and a half. But what you would have is, if there is a Republican Senate, the Senate Banking Committee and the Senate itself would have to confirm whoever it is that would be the next person who comes up. So not only is it important that the Senate becomes Republican, it's also for a number of, holding these, I would say, pretty profound policies or ideas coming out of the Democratic platform. You also want to have that flip to be able to have checks and balances in terms of who gets put into these roles. And who becomes the leaders of the regulatory bodies for this industry. So there's a lot that kind of you could peel back on who's going to be in the White House, who's going to be in the Senate, but I think it's very important who's going to be in the Senate, and then it's very bullish if it's going to be the Republicans in the White House.
Yeah, I don't think her policies are going to be enacted even if she does win, but we'll see. I mean, I think it does spook the market.
Yeah. Is there, so it feels just as like to take the devil's advocate view here, it feels very consensus, right? Outside of crypto, like zooming out of our industry, where I feel like obviously, one side has talked to us way more than the other. It feels very consensus that, like, if Trump, gets elected, it's going to be very positive for markets. And, if Kamala Harris gets elected, it's going to be negative to neutral sort of thing. And just whenever you start to see like everyone kind of line up on one side of an idea, it kind of makes you think, well, yeah, you see consensus ideas be wrong a lot. Is there any steelman for the other side of this that,
So I think I've said this before on this podcast. I don't think that it's like crypto is over in any case, But
Right.
let's play out kind of like both outcomes. I think, and this may be kind of like a weird way of saying this, but I think basically innovation in crypto, basically anything that is not Bitcoin, is going to flourish if there is a regulatory framework, there's people in the White House or people in the regulatory bodies who are trying to help foster this industry. And that's what you get with Republicans in charge. And on the flip side, what you would get, and it's still pro crypto, but you would have Bitcoin and ETH do really, really well, because those are going to be the only two ETFs that we have for a very long time. And you're going to have more enforcement actions. You're probably going to drive a lot of the innovation and the startups overseas. I mean, it's kind of hanging on by a thread right now in the U.S., but there's going to be no reason if it looks like it's going to be another 4 years of regulation by enforcement. And so you're going to have the bigger get bigger, or the biggest get bigger, and that's going to be Bitcoin and ETH. They're going to do really well, and that is still pro crypto. But it's not the crypto that, frankly, like any of us care about. We want to see this industry move in the direction of application categories that are built on chain, DeFi becoming, infrastructure for financial services, stablecoins being a major part of the payments ecosystem and the financial system. Like, all of these things probably will not happen if you don't have a positive regulatory environment in the next 4 years. Period. Full stop. Bitcoin, like what we know the Democrats will do, they're going to probably print more money, and so Bitcoin will probably do really well. That's what we get.
And frankly, like ETH and Bitcoin have these TradFi inflows, and like I think they do well kind of under any market regime where they're printing money in a profligate sense. I think about like who really needs Trump to win, and I think the innovation economy to a certain extent. I do have some hope that the Democrats are serious about a pro-innovation crypto policy, but like, I think specifically about Solana, and like, they have that 4.5 million token unlock coming or starting in March of next year. Like, they probably really need that ETF to soak up at least some of that demand. And so like, I do think, I heard Avi say that, ETH is a Trump trade, Bitcoin's all weather, Sol, whatever. But it's like, I think ETH and Bitcoin do well under either administration, but Sol really needs that ETF. And I don't even think in a Trump administration it comes next year. And so maybe the timing is even off if that happens. So it's so asset specific.
Yeah, I agree. And I guess we'll have to see. There's a lot of daylight in between now and the election. I don't know if you guys saw also, but there was a pretty big spread in between Predicted and Polymarket, which I thought was pretty interesting. It's probably just the cost of arbing those two markets is very low. I think there's been a lot more that's been bet on Polymarket. There's like an $800 restriction for Predicted, something like that. But there's sort of an interesting debate because, probably there's a bias in crypto, for Trump because he'd be friendlier towards people in the US, that type of thing. But it was interesting to see the spread in between those two prediction markets for sure.
I think the liquidity on Predicted is just not a fair comparison. Makes it not a fair comparison.
Yep. All right. Last question for you on the before we get into some of the more crypto stuff, but just on this jobs revision number and what you guys sense coming up. So we've got Jackson Hole. We're recording this on Thursday, so Powell's going to address people tomorrow. And Vance, like you were saying, I feel like this is when he sort of makes these big shifts, and he used to more speak to the mind of the Fed than any specific policy decision. I feel like what's being debated right now is a mix between a 25 basis point cut versus potentially 50, and with maybe even 25. I guess it depends on your view. What would be more bullish? I think a 50 basis point cut a couple of weeks ago would have been more bearish because there was the idea that there was actual trouble in the economy, whereas today I don't really think that exists quite so much anymore. And then what is your guys' take on this huge revision number? I know that they're in previous minutes, the Fed, indicated, hey, they were a little bit skeptical about the jobs numbers that they were seeing, but it seems like a massive revision to me. And, I don't want to like mid-curve this because I don't spend a lot of time, the BLS data, and I don't know how common this is and all that type of thing, but it seems pretty significant from my standpoint. But what do you guys think?
It's very concerning that we are 800,000 jobs off, and that the employment rate is 4.3. Unemployment rate is 4.3%. if I'm Powell, I'm kind of thinking we hiked too late. We did beat inflation. I mean, like let's just throw these numbers up. I just put it in our chat. You know, we did beat inflation. Inflation is in the twos, and you know we'll see what September looks like. But with oil dropping and gas dropping, I don't know if you guys have noticed, but gas costs a lot less right now than it did even a year ago. Like, are we going to get sub two? And I think that's where this deflationary bust type idea really starts to come into play. And so I would expect his speech tomorrow to say something like, "We believe we are, you know, effectively done bringing inflation down to its target. We will do whatever we can not to cause it to rise." But I think their sense is that they're going to shift more towards the dual mandate, which is full employment and inflation, versus just focusing on inflation. They may even say that their focus is now the unemployment side versus inflation. So, what are the risks to tomorrow's meeting? You know, Powell comes out and says, "Look, like, you know, next move could be a hike again," but like, I don't know, that wouldn't fit with how I understand the Fed to work. What does Joseph Wang say?
That's a great question. I'm not actually sure. I'm sure he's probably doing some sort of overview or something today. But I would definitely. We've referenced him on the show a couple times. He's a Fed guy on Twitter, and he used to actually be a trader at the Fed, and he's got a lot of great perspective on. I mean, he's a great reader of markets, but he's got a lot of great perspectives on how the Fed tends to think about things. Just from having worked there for a number of years, and so yeah we should see what he's got to say.
He literally does not miss.
No, that man since 2021 has been spot on. And, you know, he's not like bear hold like a lot of, you know, more macro oriented accounts are, where I just feel like I've been reading perma bear stuff for years. And he's been pretty bullish the last couple of years. So he's still very bullish. Last time I checked on his views a couple of weeks ago, like he's still bullish this year, the end of 24. So,
I mean, I'm just looking at his tweets right now. He thought the Nikkei sell-off was overdone. He bought that, and he's not going to feel comfortable until post-election. He's got some comments on the Fed never really believed that the employment picture was as rosy as some people said it was. It seems like he's messaging that they're going to be pretty dovish tomorrow.
Do you guys remember we talked about on the show it might have been like over a month ago now, but there was this article in The Guardian where people's various sentiment gauges from people was not matching up with the data that was coming in from the economy. So they polled people and they asked, what do you think the unemployment rate is? And do you think we're in a recession? What's the price of that? Like, how much has the S&P 500 gone up or down this year? And everything that was kind of polled was just very bearish. Everyone assumed the S&P was down, that unemployment was way higher than it was. And it's just interesting now to see this revision come back, because maybe that sentiment gauge from people was actually more right than the data was. You know, it feels like people knew something a little bit.
It always kind of is, but like, it's just like which people. It feels like real economy people are very much in that camp, but like, you know, macro Twitter people have been calling for a recession for, I mean, like, I don't know if you know who David Rosenberg is, but dude was the chief economist at Goldman Sachs, and he's been calling her for recession since like 2022. And it still hasn't come. And I think when it does potentially come will be next year. But by that time, like, we may be out of this recession. But like, again, everything will lag. You know, Trump will come into an economy that looks like it's kind of on its knees, and he's going to kind of do whatever he needs to do to bring it back up, including just unilaterally cutting rates.
Yeah, it actually was. I mean, Rosie did, but I think it was like 99 economists surveyed by Bloomberg out of 100.
Right, I remember
crazy
that
amount thought that there was going to be a recession, and
well, you've got the yield curve inversion. Now you've got the Psalm rule. You've got like basically every rule that has been a prediction of recessions is either going to be all debunked, or this is going to be like the asterisk here, or you know, we're heading into something. But I agree. I mean, look, the data doesn't suggest that we're in a full-blown recession right now. It may feel that way, but it's not. You know, it's definitely not something that is that's actively happening. I also think back to, like, if you go back and reread some of the reports and some of the perspectives from late 2007 into early 2008, because technically the recession started in 2000, like mid 2008, before Lehman Brothers collapsed. Because remember, Bear Stearns sold in March of 2008. You kind of had indications, and I was literally taking my first econ class in the fall of 2007, and I remember like the big question on the test was like, do you think we're already in a recession? And it is like kind of a question as to when these things start and when can you feel kind of the directionality heading in that way, and does it actually ever get there? So I'm not counting it out of possibility, but I think frankly, if it is one, it's going to be pretty like mild or medium. It's not going to be insane if there is a technical recession, but I also think we could ultimately just move past this.
Yeah,
we could. I have noticed, like, I still there's so many industries that are kind of still in purgatory. I still keep tabs on entertainment companies because I used to work at Netflix, so like it's interesting to kind of still track them. They're dealing with the loss of live sports. They're trying to restructure basically all of the traditional entertainment companies. Like, they're kind of pushing along on a string. Commercial real estate, very similar. Traditional venture, very similar. Like, there still is so much digestion to happen, and it makes me kind of feel like a little bit like it's all going to happen at once. Either rates come down and all this stuff gets restructured, or it hits a wall at some point.
I asked, we used to work with, you guys know Ted Seides of Capital Allocators, and
Yep.
he was the guy that actually took the other side of the Buffett bet on hedge fund versus S&P 500 performance like 10, 15 years ago.
Right.
Yeah, he's kind of an OG like fund of funds guy, and he's like just a really nice dude and got a really solid head on his shoulders. But I remember I asked him once, we recorded a podcast, and this must have been years ago, and there was some macro thing that was on the horizon that I was like worried about. And I was like, how do you deal with this? Like, how have you dealt with it? And he was like, look, I've been in the room when people tell me the sky is falling and it actually is falling. Like, he was part of that, that big short trade in 2007. And then he's like, I've also been in a room with Jeremy Grantham in, 1994 when he said we're on the precipice of a huge recession. And then it's been a nonstop bull market for 15 years. He's like, no one ever knows. I just stay fully allocated the whole time and don't worry about it. I was like, that sounds right. Like, that sounds like
it sounds
advice.
dumb, but it is the actual correct strategy. Like, kind of any stock from 2010 to today, maybe except for the financials, has done extremely, extremely well. It's never really paid to bet against stocks, especially American stocks. And leading economic indicator macro is so tough because, like, you're dealing with a sample size of like, okay, the last time, this curve or that curve de-inverted, out of the past 6 times, 5 have been a recession. It's like, well, that's still only 6 data points.
Yeah.
Like, if you brought that to any serious data science in a tech company, they'd just be like, what am I supposed to do with this? So especially in an era where these numbers seem less and less reliable, like I'm just kind of like, stay long is the mentality.
You know what? Also, this is a funny kind of meta commentary to make on a podcast, but there is almost like a negative correlation with people that sound really analytical and smart on some of these podcasts versus actually great investors. Like, I don't know. It's because you're right. It sounds better, right? To like walk through a chart and point to some indicator and say 7 out of the last 8 times this happened. And, in reality, a lot of the people that have the gift for making money, that's not, I mean, you guys know.
Guess what, Mike?
Yeah.
Mike? The best macro or the best hedge fund traders who are making these trades are not going on podcasts.
Yeah.
No,
yeah.
and the best macro traders are up like 5 or 6%.
Yeah.
Right. And then bad years they're down 2 or 3%.
Mm-hmm.
And like
Bill Ackman is up.
Right.
He's up 6% on the year.
And like, if you think about, I always find the anecdotes are like, I spent a lot of my career manipulating data and, putting it into presentations and all that stuff. Like, the data can kind of always lie to you, because at the end of the day, there's some analyst tagging the data with specific things and that can manifest weird. But like, if I look at the people that I know who've gotten very wealthy off of stocks or crypto or whatever, they're not like pair trading in and out, whatever. They're just like going into a coma on conviction assets. That's just kind of how you do it.
There's a great, I think Mark Yusko gave me this anecdote a number of years ago, but he was like, the Fidelity at one point produced a study of who did the best in their brokerage portfolios, trade over a long period of time, and people that did the best were the people that passed away because they just never traded stocks and they just held it for a long period of time. But all right, I wanted to get your guys' perspective actually on there's been a little bit of drama around the launch of Story protocol. So Story is an IP specific blockchain. And there was a big around that they raised a total of 100. This was a little bit confusing in the announcement. So they raised an $80 million Series B. They raised 40 before that for a total, or 60 before that, I guess, for a total of 140, I think is the actual story. And I think that people are a little bit split. I don't know that much about Story myself. I'm not an expert, but I think people are split. And there are some people that say, look, this is great because we've had a lot of very infra specific stuff and this feels like a real world use case. And then there's another group that says, hey, maybe this feels a little bit like kind of one of those big party rounds. And, do we really need IP on the blockchain? And it was just interesting. And, I don't mean to criticize here at all, but one of the founders, SY Lee on Twitter, SY, yeah, he, kind of specifically called out both Monad and Barachain. He said Story seems to be playing a radically different game from other crypto infra players like Monad and Barachain. That person was almost daring me to consider whether I could be confident about carving a new niche and not the usual same old infra masturbation or playing a different, slightly technically better generalized blockchain. And, both, Keone jumped in the comments, was just like, hey, hope your team is successful. And, Smokey from Barachain is like, hey, dude, there's a little bit of weird shot to take, in your announcement. And it kind of started this beef. And I don't know what you guys think about this, or maybe it's just more indicative of this kind of PvP, attitude on Twitter these days in general. But I just thought it was kind of interesting announcement.
It's kind of like the Don Draper meme in the elevator. I don't think about you at all.
Yeah, I mean, I'd kind of forgotten about Story Protocol, and I do think like IP on chain is it's kind of a nebulous market, but like I do think like selling digital collectibles, putting known IP on chain, that does hopefully expand the addressable market. But there's a lot of different shapes that could take. Like Barachain is developing IP. Like the chain itself has a mascot. People are starting to build different types of derivatives of that and start to push it out more broadly beyond the Barachain ecosystem, especially in Japan and Korea. And so it kind of like belies like a fundamental misunderstanding of what specifically Barachain is going after. And then, Monad, it's like, look, like you're just going to hate on these guys for developing a fast and cheap blockchain in a space where these are the largest outcomes. I don't really get it. It just feels like, to Michael's point, we don't think about them at all. And they're trying to get into the conversation, which I understand and respect, but they're going about it kind of the exact wrong way. Like trying to use the bully pulpit to beat people into submission and convince them that you're the right kind of way to play the space. I don't think I've ever seen that work, but I guess we'll see. Only one way to find out.
Yeah, I think that there's, I felt for a little while that there's opportunity for some protocol, and this could actually be either like a new layer 1 or an L2 or any developer platform to sort of counter position this infra fatigue narrative and just say, hey, we're really open to apps or something like that. But I think there's probably a line in between, respectful counter positioning a narrative versus calling specific protocols out as just a general PR strategy personally. But maybe there's some backstory there that I'm just missing. But yeah.
It's been kind of funny, and this has come up a couple of times with people that we've been talking to recently, whether it's other investors, people in the space, or people who work for these actual like other protocols. The presentation of sort of like the market assessment of what's really doing well right now is sort of like, well, you've got Barachain and you've got Monad, and then you've got us. And it's basically just the three of us that are competing. It's like, wait
it's only three of us. It's only three of us.
One of these is not like the other two.
That's super funny.
Look, respect to anybody that can jump into the fray and want to put their name in the hat and try to go for something big. I don't never would put shade on anyone who's ambitious like that, but you do have to understand where you're positioned in the market, what you're going after, and why two of those are very successful. Probably should focus on maybe the why and doing some of those things as opposed to just throwing your name in and like marketing yourself as like the top three.
Yeah, and the last thing I'll say is like the hyper focus on the next billion users. I totally get that, but in our view, you have to build that sequentially. Like Bitcoin worked because there's a strong group of core believers. They built, financial services, different things on chain. They slowly evangelized it to kind of the concentric circles moving outwards from them, and then it broke out. Same with ETH, same with Solana, same with any blockchain that's had real adoption. Trying to go from like 0 to 1 is a lot different than going from like 0 to a billion people. So I'm kind of suspect of the story strategy, and I think more elements of the story strategy are contained in Barachain than they'd like to admit. But that's why we have markets. Let's decide who's more valuable.
I've got so that really resonates with just in Blockworks has seen a lot of different companies, protocols, crypto CeFi companies, whatever, try to go to market, and I think the ones that do it most successfully are thoughtful about where they are in their current stage, right? So if you're a new L1 or L2 or something very crypto native, your market isn't the concentric circles outside of crypto yet, right? Your market is people in crypto today. And then you get to a point where you've saturated your existing market, and then you try to, get concentric circles outwards. But I think, and look, I understand it's really tough as a founder actually to stand up there and create a mission which is simultaneously inspiring enough. And I think that's why you got a lot of the we're getting 1 billion user type things, but also realistic at the same time, like we can deliver. And it's just something that you got to figure out as you go. But I would definitely say the teams I've seen do it the smartest are like, all right, this is where we want to be on a 1 to 2 year time horizon. This is our audience. And then that's going to change and build, once we hit XYZ sort of point. So just something that you probably got to evolve as you grow.
Last thing I'd like to talk about is the Tron Sun Pump. I don't know, Michael, if you've seen this, but
oh yeah,
basically Justin Sun and co have kind of launched a pump.fun competitor, and they've actually succeeded in getting a lot of people over from Solana, at least from the timeline on Twitter, it seems. And like the other chart that I saw was just like this DEX volume that was like 70% down, I think like week over week, just from pump.fun launches slowing and some people going to Tron. And like, this isn't meant to shit on Solana, but like the meme coin market is extremely fickle. And it's controlled by, a small handful of insiders and their kind of leverage and an ability to, promote their thing. And it's just very interesting to see Tron taking a shot at Solana. It's interesting because you've seen just Sol just kind of like insurgent versus incumbent for so long, and now the shoe's on the other foot, which is a different kind of perspective for the market to take.
So agree with all of that. I was talking to Kane about this, and he made the point, which I think is hilarious, which is there's a big marketing miss on this. They should have just called it Just Pump.
Yeah, just stop pump.
Just Stop Pump. But and because everything else is called Just in that ecosystem,
right? They'll
but
just lend, yeah.
I think one of the things that's interesting about it is this going to be like the continuation of the meta of you see one thing working on another platform and you just whitewash it into this ecosystem of everybody else. Boom, we have the same thing. Rip, replace. And I think that's kind of a question as to where value accrues. And this is like, it's pretty insane the amount of activity that happens on Tron. And I think most people don't know this, but like USDT on Tron is one of the primary forms of payment in Middle Eastern countries, in Southeast Asian countries. And it's one of the most used applications of crypto, probably writ large. And where you would kind of say, okay, well, it's just Justin Sun, maybe trying to like misdirection against this whole rat BTC, kerfluffle that popped up a week or two ago, and misdirect. But it's also, I think, something that if you have a universe of users that are bought into your ecosystem, that are, that are using and have a ton of capital on your platform, and you have an application that you think would really work, we saw this at Snapchat. We would invent, stories, and Instagram would copy it a year later. It's and it doesn't matter. Good artists copy, great artists steal. But I think this one could potentially have some interesting ramifications because of the amount of activity and users that are already on Tron.
There is a little bit of an I don't know how to square this circle. I'd be curious what you guys think about this, but I think there's a little bit of an uncomfortable reality where some of the chains that are actually doing pretty well at acquiring users are the more centralized ones than we'd like to admit. Like Tron is a really good example of that. Whatever, maybe it's decentralized. I don't know that much about Tron, but I'm assuming, it's not as decentralized as Ethereum, certainly. And the other success stories here are Base, which is cool as Base is, and it's awesome that they're doing well. It's a pretty centralized platform, right? And and then the other one is Telegram as well, like Ton. The Alliance guys are. I'm recording a podcast with them tomorrow, but Jason went and spoke to their cohort, and he said basically everyone there was building on Ton as a blockchain. And I don't know. I don't really know how to square this circle. That I would consider myself like a true core believer of the decentralization principles, but also you can't really argue with the market that these more centralized chains are doing a better job of acquiring users in a lot of cases. So how do you guys square that circle?
I mean, centralized chains maybe not the best description, but there's varying degrees of decentralization, and I think the L2s, to Base's point, they do pretty well at acquiring users, and they're all just native to the EVM ecosystem. I do think with Tron specifically, it kind of dispels this narrative that the EVM is incompatible with onboarding user retail flow. So we've kind of dispelled that. With Ton, I think the question is what are the actual daily user numbers? We've taken a few pitches in the past couple of weeks where people are like, the 200 million they claim is more like 5 million if you can get them on chain. And the people who are playing, we got really good data on this the other day. It was the people who play games, only 25% of them connect to wallet. So it's 1% of the 200 million are using the game, then 25% of those are connecting a wallet. And so all forms of onboarding are not created equally. But I think where my head goes with Tron is okay, how hard is it to recreate this meme coin ecosystem, and how durable is it? Because Base had meme coins for a while, Degen and the different kind of meme coins that were popping up there. Sol, I mean, it just looks like Pump Fun is slowing. Tron kind of feels like it's just starting to hit that crescendo of okay, there's a lot of people bridging, people are making money. But even now, one of the guys I follow who does a bunch of meme coin trading on Tron is I went from a
smart chain.
Right, or sorry, Tron. They were I went from 120K in profit to losing 50 grand. I'm done with this. So the sugar highs are lasting less and less with meme coins specifically.
Oh yeah, I was saying that I think there's even a rotation from Tron to Binance Smart Chain now. I think
Oh yeah, totally.
Yeah. So I'm with you. The meme coin thing is just really tough. Michael, you gave a definition a little while ago that they're kind of similar to early internet viral videos, which is still my sort of favorite mental model for thinking about it. But yeah, I don't know. I'm on the fence about I kind of have a allergic reaction to people moralizing about it. I don't really like people being oh, this is a bad use case
no
or something.
Moralizing, not allowed.
Yeah, not allowed. But at the same time, yeah, I agree with you on the dynamics. I mean, we've talked about this. There's just so much supply, and I just see the amount of meme coins getting created on Pump.Fun. It seems like more people are losing money than making money. I don't know.
But you now have this very interesting dichotomy of low float, high FTV tech coins on one side. People hate those for I think good reason, but they can become huge. You have meme coins in the Pump Fun trenches, infinite supply on the other side. And I think we're getting to a process of elimination where people are going to be all right, I'm going to evaluate this on user count or fees or some fundamentals. I just can't keep just getting the euthanasia roller coaster done to me. And it's DeFi 1.0 is catching a bid these days, which is pretty interesting. Aave is doing very well, Maker's doing well, SNX is doing well. I would not be surprised to see that continue.
Yeah, especially if Kane knocks out David at permissionless. That'll be
Dude. Who,
I just
who
want
you-
to know if that poster
who you
board
got?
was his real body or whose body he used for that.
Yeah, I can't comment on whether or not those are real
kidding, I'm
bodies,
kidding.
but I think it'll be a good
Kidding.
fight actually.
Yeah,
I
let's
think
finish with this. Who you got?
yeah. I mean,
Even
I
odds.
feel like I'm much closer with David. I'm gonna back my boy here, and I'll give it to David here. But I haven't really seen either of them fight, and I haven't seen Kane in real life, so I don't know how big he is as a
I
dude.
think Kane's
He's
taller.
big. He's lanky.
You know what? A lot of it is reach too. I think reach
Exactly.
is yeah.
I'm gonna give the advantage to Kane based on reach.
Okay.
Yeah, I'm gonna go with Kane too. He's got some pent up rage, as well. So let's see what happens.
Okay, I've got another one for you guys. Actually, just a fun. Do either of you guys listen to the Joe Rogan Peter Thiel interview?
Yes.
Yep.
What do you guys think about it? Takes.
I mean, Peter is remarkably consistent.
He's very smart. He's a really
It's the
smart
same.
dude.
It's the same talking points he's been espousing for the past 10 years. I think they've become more and more true. The interesting ones that he's come up with recently, I don't know if they're on this pod, is like we've gone way too far in the direction of like quantification. Like even like people like studying engineering at school. Like his new thing is like, the English majors and the lit majors and the humanities majors are going to have a big up in a world where just like prompting ChatGPT to build an app or doing creative things are more valuable than just like kind of monotonous, repetitive tasks. And I think crypto is a pretty good example of that. Like you have to believe, you have to be creative, you have to kind of acknowledge that this is a different path of technology. So I think that was probably the most interesting take.
As a classics
think
major, I endorse that message.
My kind of like meta theme of that entire conversation is it was like a masterclass in how to think from a contrarian perspective by default. And you take basically every single presenting of a situation, the Epstein situation with Bill Gates, how to think about, the over quantification, like how to think about, markets, everything that he talked about. The basic understanding that he started with was, what if everything that we know is wrong? Or everything that everybody believes is wrong? Or maybe it's a part of it, but like, what if it's just a simpler answer? And I think that, like, that's what I took away from it, is just like, the best way to have most thought-provoking conversations or perspectives is to start with a straw man.
You know what I appreciate about him as well. I've never really heard him talk that much. I'm like kind of familiar with some of his bigger ideas, but he does a good job of being contrarian, but not crazy contrarian. Sometimes you listen to contrarians and you're like, are you just doing this for the sake of being a devil's advocate, or is this your brand? Or there's always another conspiracy theory or something. And he had a lot of Occam's razor in him. It did, he was good at being like, no, Joe Rogan, I don't think that the pyramids were battery. That wouldn't actually make that much sense. And I thought
it was an interesting intellectual matchup.
Yeah, for sure.
Yeah.
He did have one.
Joe really wanted to talk about aliens, and Peter was like, "Got a couple theories. Let's move back." Joe was like, "No. Let's go back. Let's keep talking." It's like just talk.
Dude, it's so funny. I did feel a little bit going through the conversation like a sort of descent into madness as well. But he had one point that I thought was kind of funny. Yeah, he was talking about the Bill Gates, theory about maybe he like locked up his wife Melinda, via this foundation, and I was like,
right,
brother, you got a foundation, yeah, you got a foundation too, and little little boyfriend on the side, I was like, okay, man, it's a little projection there, but yeah, I thought that was funny for people who listen to the podcast. I thought that was
I was gonna say everybody now needs to go listen to it to understand.
Sorry, that was such a deep cut on like 2 hours into this podcast. But anyway,
last thing, maybe I was watching the DNC last night, and this is kind of on that same Epstein thread, like what exactly happened, etc. And Bill Clinton spoke last night, and I think like older people know Bill Clinton as a politician, philanthropist, whatever. I feel like all young people know him as the Epstein guy. Like that's all the context that we have. And for him to be on that stage with that context was very, very weird on a night where they were celebrating like women and reproductive freedoms, which, we believe in, obviously. But you got Bill Clinton saying that stuff. It's just a bit weird.
You know what I was thinking about this is even in the context of like conspiracy theories and all that type of stuff, is there are some things that happen in history. Like I listen to this podcast I've told you guys about a million times, The Rest is History, but they'll go through things and they'll just say things very matter-of-factually. Like, during the French Revolution, oh, this guy was supposedly on this one side, but he was doing this other thing. And you just don't even question it. You're like, yeah, of course they were doing that. And
right.
There are lots of things right now. Like I was just thinking about that within the context of the jobs report. It's like, no, well, it's not there's no meaning behind it, right? It was just like an innocent mistake. But if you were listening to this as a podcast 100 years from now, it's like, oh yeah, the economy was slowing down and yeah, there were a little bit of a fib on the numbers. You'd be like, oh yeah, that makes sense. But it feels very conspiratorial in the moment, because I don't know. I just just an
might have to get the tinfoil hat back out.
I think we got to get the tinfoil hats back out here. Yeah. All right, fellas. This was a really fun one. Michael, enjoy your offsite, and yeah, we'll do it again
later, guys.
Next week.
Peace.
See you guys.
Hey everyone, hope you all enjoyed today's episode. Want to give a final shout out to Namada, again, a team that is near and dear to my heart. They are building the Shielded Asset Hub, which is protecting the future multi-chain. Talked a little bit about how that works in the mid-roll, but for now, what I would highly recommend that you do is go check them out. They're in their mainnet launch phase. You can follow along with everything at namada.net. You can start rewarding yourself by shielding your actions and strengthening data privacy for all across the multi-chain. So thanks again, Namada, for all the great work that you're doing.